But I think for most people, the really painful part of the cycle is what's coming now, because usually when an economy turns down, financial markets kind of break. That leads to a lot of layoffs and a lot of people losing their houses, losing their jobs, and unfortunately, that's probably what's coming in the not too distant future. So, yeah, eventful times, interesting times, but not pleasant times for most people.
On today's episode of the What the Finance podcast, I have the pleasure of welcoming back John Rubino, who's been one of our most popular guests, which is really excited to have him back. So he's the founder of dollarcollapse.com, author and co-author of 5 books, and he currently is writing really good articles on his Substack, which I enjoy. So, John, thanks so much for coming back on the podcast.
Well, thanks for having me back, Anthony. Good to talk to you again.
Yeah, and it's great. It's crazy to think. I think we our last interview was sort of at the end of February, and a lot has happened since then. It's been one of those years where every day it seems like new things are happening. So, for example, banking collapses in the US. There's been Fed pivots. There's been inflation, massive increases and decreases. More rhetoric about people not using the dollar and sort of the fiat currency collapse. So, I guess in your opinion, what do you think of these things, and what are the key things that you're currently watching?
Well, I think the thing we definitely have to be watching right now is rising interest rates. Because if you look back at at least the last couple of cycles, and probably most of the cycles that happened previously, the economy is strong, it starts to overheat, prices start to go up, asset prices definitely go up, and the Fed or the central bank starts raising interest rates, but nothing happens. Things stay pretty good and pretty hot. And then interest rates go up some more, and they go up some more. And then finally, they go up enough to break the momentum of the financial bubble, and everything falls apart for a while. So we're in that kind of a cycle again, where at least in the U.S. the economy seems still to be growing a little bit. Financial asset prices are rising, yet interest rates are rising dramatically. For home mortgages, they were as low as 2.5% a couple of years ago. And now they're up to 7%, which means the real cost, the monthly cost of buying a house with a mortgage in the US has doubled. And that has not yet crushed the housing sector. Same thing with commercial real estate. A lot of office buildings and apartment buildings and warehouses were built using extremely cheap financing over the past decade. Now, a lot of those debts are coming due, and they have to be rolled over, but they have to roll over at much higher rates, which makes a lot of commercial real estate unprofitable. And those big buildings are going to have to be dumped onto the market somehow. Either they're sold at a loss, or they do jingle mail, where they just send the keys back to the bank, and then the bank has to eat that loss. Well, that's all still to come with higher interest rates. And that will break the momentum of the financial asset bubble that we've got going right now. And it's just a question of when. So it's very possible that the coming 6 months or the coming year turn out to be a lot more eventful than the last year or two have been, because it's the roller coaster peaking and then heading straight down. And as somebody who has some stock market shorts, I'm kind of anxious for that to happen. So my shorts, my put options don't retire or don't just die without becoming valuable. But I think for most people, the really painful part of the cycle is what's coming now, because usually when an economy turns down, financial markets kind of break. That leads to a lot of layoffs and a lot of people losing their houses, losing their jobs, and unfortunately, that's probably what's coming in the not too distant future. So, yeah, eventful times, interesting times, but not pleasant times for most people.
Yeah, it's crazy thing. Have you been surprised by, I guess, how much the economy is held up, or how well the economy has held up with all these headwinds that it's been facing?
Yeah, well, yes and no. I mean, this is how the cycle normally goes. I remember vividly the past 2 cycles in the late 1990s and then the 2000s, when we had financial bubbles that just never seemed to pop. They just went on so much longer than they should have, even though interest rates were going up. So this feels like that. And I am surprised that it hasn't, our current bubble hasn't popped yet. But looking back on previous bubbles, I guess I'm not that surprised, because they did the same thing. They stretched the tolerance of most people who were bearish to the breaking point, and that's kind of what's happening now. You know, a lot of the shorts out there, people who either went all to cash or have bet against these financial markets, are not happy with their decisions, or they're losing a ton of money and they're freaked out, one or the other. So this is very familiar in terms of history, and if history repeats, we've got a very nasty bear market barreling down at us shortly.
Yeah, and what are you going to be watching to see when, I guess, that catalyst occurs, or see when the sort of thing starts to roll over? Is there anything in particular that you're watching, or?
Well, you know, watch the local and regional banks in the U.S., because the government policy has set things up in a way that's very unfavorable for them. We have an inverted yield curve, which is to say long-term interest rates are lower than short-term interest rates, which means the business model of say a regional bank, which is to borrow short and then lend long locally, doesn't work anymore. They lose money if they do that. And they also have big bond portfolios and commercial real estate portfolios, both of which are in the process of getting crushed by higher interest rates. So it's possible that we see a lot more small and medium-sized bank failures in the U.S. And that's the kind of thing where that it has the potential to set off other dominoes. For instance, if we have a lot of small banks go bust, then everybody starts looking around, well, which insurance companies that have these same investments as the banks are going to go bust now? And what about pension funds? And so angst spreads from one sector to other sectors. And that forces the government to step in with a big bailout, which then spreads the angst over to the currency, you know? So we could end up with a couple of sector crises, which lead to government bailouts, which lead to a currency crisis. That's a very believable scenario for the next 2 or 3 years. With one big exception, historically, because we've never been here before with everybody in the same boat. Usually it was a handful of countries, handful of sectors within one country, something like that, going bad. But now it's everybody all over the world, or almost everybody. We all have fiat currency printing presses, which have made it possible to keep the everything bubble going much longer than otherwise it would have been. But when one part of the bubble bursts, it'll take the rest with it. And so we'll get kind of a global crisis where we've never seen anything like that before, where several or most big currencies suddenly run into some kind of a crisis that leads to their value plunging, and inflation spiking and interest rates spiking in response. And if it happens globally, it's not clear how we fix it. I mean, who's left to bail out the people who are in crisis if most of the big governments and most of the big central banks are the ones who need bailing out? That's where it gets really interesting. And I don't have a great answer. It's possible, but it's one of those problems with no solution, which will truly freak out the financial markets if they come to realize that there is no adult supervision. You know, daddy's not coming home to fix it this time. So I think that's totally a believable possible scenario for the next couple of years.
So then in that scenario, why would the central banks not bail out the government? Or is it that they try and it just doesn't work and we get sort of a Weimar Republic?
Well, if the currency is plunging, then the central bank loses its ability to bail out the government, because what a central bank does is it creates a lot of new money, tosses it into the system, and that liquefies everybody. But if the value of the money that the central bank is creating is going down and it creates more, that makes it go down even faster. So it enters a death spiral where what it normally does, the easy money that it usually uses as its main tool for fixing a bursting bubble, no longer works. And they're left with nothing, because basically lower interest rates, rapid currency creation, those are the only things they have. And if you take those away from them, then they're completely impotent. And in a fiat currency system, the currencies only exist, you know, they're not backed by anything real. They can't be converted into anything real. And they only exist because we have confidence in the people who are running. So you take that confidence away. You let people see that there's nobody behind the curtain, and central banks are no longer able to stabilize a global financial crisis. Then the rational response on the part of market participants is to run for the exits, right? You do risk off as quickly as you can, which means you sell your bonds, you sell your stocks, you sell your real estate, and you convert the resulting cash into real things like oil wells or gold mines, or the companies whose stock you buy in those sectors, or physical gold and silver, farmland, things like that, things that governments can't make more of, and can't inflate away because of that. And those are relatively small sectors. Those are small doors for a crowded theater full of people where everybody's trying to get through it at the same time. And that's liable to be what we have happening, where there's basically panic buying of real things, which means you want to own gold and silver now in anticipation. You want to own uranium stocks because nuclear power is pretty much immune to all the stuff I've been talking about. You want to own energy companies because we're going to need energy regardless of what happens. Food-related things because we're going to continue to eat. Those are the things that will do well in this kind of a situation. And then financial assets won't do well at all, like government bonds, which depend on the value of the currency for their value, are liable to get whacked, just like they did in the 1970s when we had our most recent currency crisis. Bank stocks, which are basically derivatives of the bond market, they'll get crushed in this kind of a situation. So you want to avoid things that depend on the value of the dollar or the euro or the yen or pound sterling for their value, and move into things that don't depend on government action and currency values for their value. So there aren't very many people in real assets now relative to the number of people and the amount of assets that are in financial assets. So it's not clear how you get all that financial asset capital into a market as small as gold or silver, for instance. So I think we have panic buying at some point where, there's an old joke that silver stops being silver, it becomes unobtainium, a different metal called unobtainium because you can't get it. You've got cash, you're willing to pay, and there just isn't the supply there anymore for it. When that happens, the relative handful of people who own those things going into that part of the cycle will get very rich very fast. And with any luck, they'll manage that process wisely, and they'll be the ones with capital to do the rebuilding as we come out of it. When we are at the bottom of the cycle and we've got to figure out what to build on the rubble of the 70-year experiment in fiat currencies. The gold bugs and the energy people and the people with massive farmland will be the ones who have the capital with which to rebuild.
Yeah, it makes a lot of sense, and it's a bit scary to think about. Do you not see, let's say, if something like that were to happen, that they, similar to what we saw with the banking crises or the few bank collapse a few months ago, they're going to try, and the Fed, at least, and other central banks, are going to try and do something like use a scalpel rather than their hammer of interest rates. So what they did is they obviously bought bonds at face value rather than the current price. So you see them trying to, I guess they're going to try and do all those things, but your thought is that it's going to not be enough.
Well, they'll absolutely try to do that again. But think if they tried to do that a year ago when the dollar was being inflated away by 10% a year, when we have double-digit inflation, and the central bank steps in with a whole bunch of new currency in order to buy assets. Well, the logical response to that is to get out of that currency as quickly as possible because you see it being inflated away. And we know that's possible now. We had double-digit inflation last year. So we know that it's possible for the currency to lose a big chunk of its value very quickly, which is another way of saying we know it's possible for the prices of the things we need day to day to spike, because we saw it happen last year. That's the kind of thing that now we know it's possible. It's very easy for us to see it happening again when we see the government doing those same things again. And it leads rational people to want to just not play that game anymore and just get out. And if people do that, and it makes the value of the currency fall more quickly because of all the selling pressure, then there's no way that the Fed, for instance, in the US, can step in and buy a huge number of assets at face value. because that just makes the problem worse instead of better. And I'm afraid that that's the box the central banks are in now, that the tool that they used to use to fix collapses in various kinds of asset bubbles will actually make the collapse worse now. And people don't get that yet, but they're primed for understanding it because they saw a lot of the pieces of that puzzle happen in the last year or two. You know, we had inflation and we had big government bailouts, and it didn't go well. So next time we have a bursting bubble and we see the government come in with another big bailout, we're going to be leery. And a lot of people are going to want to preemptively just get out. So yeah, very interesting times coming. And it's a good investment thesis. It's a very coherent investment thesis. If you want to shift out of financial assets and into real assets, there are very specific ways to do it. They're not super complicated. And it's easy to do it while the markets continue to be liquid. There will be a time when you can't do it. But right now, it's the easiest thing in the world to sell a couple of bank stocks and buy some uranium stocks or something like that, or raise some cash from your bank account and go buy some silver. You know, you can do those things pretty easily. And this is a pretty good time to do it, I think, based on what looks like it is coming.
Yeah, it definitely sounds really interesting. So, as you said, there's this potential collapse, and I guess if we look at what's happening, not just for fiat currencies, but specifically for the US dollar, a lot of countries are trying to get off it. They're trying to sort of use their own currencies or use different systems to sort of interact with each other to make payments. Do you see something like a BRICS currency or a maybe Bretton Woods 3.0 that is backed by gold coming to the forefront, or do you think there might be a trust issues to the fact that you don't actually own all that gold? If I were to convert it, I don't believe that you have that. How do you think is that an option?
Well, I think two things will definitely happen on the monetary front. One is that the fiat currency central banks, that is the ECB and the Bank of Japan and the Fed and the Bank of England, will try to use the coming crisis as a way to institute central bank digital currencies. In other words, they'll try to take over the banking system, shift your bank account to an account at the Fed, and then in that way have total control over your monetary life. At the same time, the BRICS countries, like you said, they're gearing up for a potentially gold-backed currency. Jim Rickards, who I think you've had him on your show before, right? So you know who he is. Just released a blockbuster article the other day where he said this happens with the BRICS in August. It's coming that quickly. And what they're going to do is they're going to start a bond market, a BRICS currency bond market from scratch by creating and selling bonds denominated in that currency in the local countries where the members of the BRICS coalition are. And they're going to have their local people buy those bonds. And there's a lot of people locally in China and Russia and India to do that. And from a standing start, that's going to create a bond market in sovereign bonds denominated in the new BRICS currency that will become an instant competitor to the dollar as a reserve currency. And the best time for them to do that is during a fiat currency crisis, right? So it makes sense that they're gearing up for something like that because they see the same thing coming that you and I do. So these things could happen contemporaneously, where we get the push into CBDCs, central bank digital currencies, and the BRICS currency emerges at the same time. And how this goes is anybody's guess. These are unprecedented events happening during an unprecedented financial crisis, and being run by people who have never done it before, so may make mistakes. They might be brilliant, or they might make beginner's mistakes in the process. Man, from an economics geek standpoint, it's fascinating. This is financial history like nothing else we've ever lived through. But it's also pretty scary because there's a lot of things to get wrong as this plays out, and a lot of really horrible things that are kind of baked in the cake already. I mean, we're going to impoverish an awful lot of people if we have to dramatically devalue the big fiat currencies, which is, I think, the only way for the fiat currencies to get out of their current troubles, massive devaluation. But the people who trust the governments in their countries by keeping local currency in their bank accounts or under the mattress or wherever, or a lot of bank stocks and government bonds in their savings accounts and brokerage accounts, those guys are going to be impoverished. And it's not clear how they're going to respond to that, because massive inflations that impoverished a whole generation in the past have led to dictatorships. You know, there was after the French Revolution, there was a hyperinflation, and France and Europe got Napoleon. And then after the German hyperinflation in the 1920s, Germany got Hitler. So there's a reason for that, and that is when you disillusion a whole generation of people by destroying their life savings, they tend to want somebody who promises to fix it and to get their money back and to take care of the people who did it. So in other words, they want a dictator who's going to go in and do a clean sweep of the bad guys and make it right again for the people who were impoverished. That never works out. But still, it's a very understandable impulse that you want a strong leader to come in and stop the bleeding when you are the one who's doing the bleeding. So that's one of the big dangers that we have going forward, is that we're screwing up not just the German mark in 1923 or the French franc in 1790. We're screwing up all the big currencies across the world, with just a very few exceptions, all at once. And that's going to lead to something that's unprecedented, inherently unpredictable, and therefore wisely avoided if possible. Just don't be in that game when all of this stuff starts happening.
Yeah, it's scary to think, and it definitely seems like there's people who are blaming others for, on every side. Everyone's blaming each other, and they're all saying that this is why we don't have what we want. And then please do something about it. They're asking the leaders to do something about it, which is concerning, especially if they get to the point, as you said, when it doesn't matter what you do, just fix it. So if we go to Europe, I know it's something that you've mentioned that all fiat currencies are going to experience this, but I think Europe's quite different in terms of it's not, it's got its own monetary policy, but different fiscal policy. So how does that impact what's going to happen there?
Europe might be in the worst shape of anybody, because they're basically an agglomeration of countries, or the Eurozone. Leaving the UK out of this now because they're not part of the EU or the Eurozone. But basically what they did was they just herded a bunch of very different countries together and put them all under the same monetary regime. And it hasn't worked, but it also hasn't blown up, because Germany, which has been a powerhouse economy, which was well run for a long time, backstopped all the other currencies via the European Central Bank. So that's why Italy, for instance, could borrow money at a lower rate than the US was able to borrow money for a long time. And that allowed those countries that are still running up massive debts that they can't cover and just aren't able to function under a sound money regime, that allowed them to stay in the Eurozone. But now, because of the double-digit inflation of the past couple of years, the European Central Bank has been forced to raise interest rates. The ECB raised its version of the Fed funds rate, in other words, its overnight lending rate, from negative 0.5% to 3.5% in just the last year. All of a sudden, Italy has to pay 4% on money that it borrows for 10 years. Greece has to pay 3.5%. These are interest costs that will bankrupt the weaker Eurozone countries. And then force a big bailout, which Germany basically has to do via the ECB. But Germany has screwed up its own economy so badly in the last few years that it's not able to do it. I mean, it messed up its energy system, for instance, on a vast scale. It closed down its nuclear plants, which were providing 25% of its energy cheaply and from an environmental standpoint, non-pollutingly. And it replaced, or tried to replace, those nukes with super cheap natural gas from Russia. And we know how that worked out. Now that's gone. And the windmills and solar plants, solar panels that Germany set up, haven't done as well as they were expected to do. So Germany has this major energy problem, which has led to it having to deindustrialize. Germany basically made a fortune by turning natural gas into industrial products and selling them to the rest of the world. Well, it can't do that anymore because it doesn't have access to the natural gas at the price that it needs to be able to continue to do that. So there is a thing called German deindustrialization going on out there, which means Germany isn't nearly as rich as it was. It's not running the surpluses that it did. And that's why their finance minister came out and said, yeah, there's no more money for the rest of Europe. Sorry. So now you've got countries that will be functionally bankrupt at current interest rates if this goes on much longer, and interest rates that are liable to stay this high or even rise for the next 6 or so months, and no backstop. Nothing to prevent Italy from just imploding and going back to the lira, or Greece doing the same thing and going back to the drachma. And that's basically what the Eurozone is looking at in the next couple of years, with really no other scenarios. I mean, short of a big war or something like that in Europe, it really looks like the Eurozone is potentially doomed in some way. And that's a very big deal because there are a ton of euro-denominated bonds out there whose value won't be clear to people as this is going on. What if it's an Italian bond, but it's denominated in euros, but Italy's not in the Eurozone anymore? What is that? What is that paper you have? What's it worth? Who knows? And that's coming. That is absolutely coming for Europe. And by the way, this is, to get a little meta, this is how easy money makes you stupid, because when credit is available and interest rates are really low, it leads you, whether you're an individual or a company or a country, to do stupid things that you shouldn't have done before, or you wouldn't do otherwise. And that's how all these countries are so deeply indebted now. They were able to borrow money at negative interest rates in a lot of cases, or in the US case, at functionally zero at the short end of the yield curve. So why not? Why not take care of all the pressing needs out there with money that costs you nothing? It's free money. It's kind of a perpetual motion machine. You just keep borrowing at a negative interest rate and then spending it on your economy. The economy grows and your interest costs go down because you're borrowing at negative rates, and so that led to all kinds of credit out there that is not being serviced adequately by the cash flows that credit was spent on. And so you've got all kinds of things that are going to blow up now, where the cash flow is inadequate, default is inevitable, and there is, the only fix is a government bailout, which can't be done. So we have a very dark, scary world coming here. And there doesn't seem to be any way to avoid it, short of, aliens landing on the White House lawn or something and giving us a cure for cancer and unlimited energy, something like that. But barring that, we have a gigantic financial crisis coming our way.
Yeah, it seems like a massive crisis. And as you were saying, that the challenge with all that debt is it was used for very inefficient methods like housing and real estate. We've seen that all across the world, and in markets and other things that hasn't really helped. It has helped the GDP in some regards, but not enough. And if it's sort of its own Ponzi scheme altogether. And then if we look at the European Union, as you're saying, that once this starts to collapse, you'll probably almost see something similar to what we're seeing in the US with banks. So at the moment, all the money's going to the big banks because they're the ones that are apparently going to be safe. It could be the same in Europe, that all the money actually just goes to those countries, that, to France, to Germany, because it's going to get transferred into the German currency or into a franc, rather than, and you probably want that because it's probably going to be more valuable rather than a lira or a drachma. So it is really interesting to see what's going to happen. And as you're saying that, do you see the potential for a war between, I guess, the West and this new BRIC country, or do you think that's maybe over? Is it more going to be a Cold War potentially?
I think there's the potential for war individually right now between the US and Russia and the US and China. The morons in charge of my country are literally trying to start World War III right now against nuclear powers. So in that kind of a situation, anything's possible because these guys are certifiable. They are crazy people. And because of that, they're completely unpredictable. But just going back, saying we don't do that, but going back historically and looking at what happens when other countries threaten the dominance of the dollar as a reserve currency, we have tended to use military force to stop that from happening. But it was always, relatively a few countries, just maybe one country decides they're going to price their oil in their own currency, something like that, or nationalize their own energy resources. Now it's a bunch of countries with cumulatively half the population of the world, a big chunk of the world's energy resources, a big chunk of other resources. And that's not as easy a target for the US, but I would not put it past the neocon psychopaths who are running the US government right now for them to treat the emergence of a reserve currency from another bloc like the BRICS as an act of war and treat it accordingly. It wouldn't be a surprise. So it's completely possible that we get a geopolitical reaction to what is basically a financial event when the BRICS currency is launched. And I think that the bad stuff that flows from that is America's fault. And the guys in charge here hopefully will be held accountable for it. I mean, if there's anybody left to hold anybody accountable after all this stuff happens. But yeah, it's an incredibly complex situation. And see, I'm much more comfortable owning gold bullion in a safe place while all this is going on than owning almost anything else, because your bank accounts aren't safe. Your brokerage account is not necessarily safe, and not even from governments. That hacking can happen in situations like this where things are very fluid and very complex. So it's completely possible to basically have your brokerage account go dark, where you know what you've got in the account, but you can't get it up online. You can't get anybody to answer the phone, and effectively you don't have those assets, at least while the crisis is ongoing, until things come back up. So assets that you can live on or grow food on or hold in your hand become a lot more attractive in this kind of a situation, because we just cannot trust the big systems to keep on functioning as well as they have during this beautiful time that we grew up in, when things actually worked, and you could trust the healthcare establishment, and you could trust the banks to keep their word, and you could trust governments to manage their currencies. None of that is completely true anymore. So there's a thing called the trust horizon that people talk about, which is basically the distance outward that you're willing to place your trust in people and institutions. And in great times, you're willing to trust globally. You'll trust the guys who ship you your fruit in the off season from Chile and promise you it's organic, and you'll trust the guys running the currencies because they've done such a great job so far. But when those big systems start to break down, you start to pull back your trust horizon. So then maybe you trust your state governor, but not the president. And then things get even worse. And then your trust horizon shrinks further. And maybe you trust only the local bank and only the local farmers, and you want to grow your own food because you don't even necessarily trust anybody else, and then you reach a point where self-sufficiency becomes your goal rather than vast wealth and a condo in another country on the beach, things like that. And we're heading for a time like that as the big systems break down and people become more and more focused on the things they're willing to trust. So my advice in that kind of a situation is get out ahead of it, become as self-sufficient as possible, grow your own food if you can, or make relationships with local farmers who when they tell you it's organic, you can trust them to be telling the truth, and make friends within your community so that if you forget some part of your prepping, there are other people who've got your back and they can help you, and then you help them, and which is how we should have always lived, arguably. And now that the world is getting more and more stressful, we're starting to move back to those old ways of behaving that are the best ways, and the way we should have always acted. So in that sense, it's a good thing. It's allowing us to relearn lessons that our grandparents learned and taught us, and that we forgot during the last 3 or 4 decades when everything seemed to work. So the result of this can be a good thing, because we end up with a culture of people who understand that self-reliance is important and are taking steps to make sure that they're ever more self-reliant. That's a better culture than the kind of culture we live in right now.
Yeah, so many interesting points there. And I guess what you're saying, the way to protect your wealth is to invest in those skills, invest in those assets, those real assets that are going to be beneficial if
it hits the fan. Yeah. The skills thing is a really important part of the equation, because if you don't know how to do basic things, like maybe basic car repair, or how to grow some food crops, it's time to learn how to do those things again. It's also time to learn how to own and manage and use guns. That's part of self-sufficiency, is being able to protect yourself, because you cannot guarantee that when things get really messy for a while, that civil unrest isn't part of your reality, because it's already that for a lot of people. And self-defense, when the cops aren't coming for a half hour for a typical call, like in Chicago or someplace, you have no choice but to be able to defend yourself. So that's part of the process. Learn the skills that you will need to take care of yourself and your family and your neighbors. And then seek out people who have other skills that maybe you aren't able or willing to learn, and be their friend, and make sure that they know that they can count on you for help. And then you can count on them for help when the time comes. So if you're in a network of people who have a variety of skills and are willing to help each other, you're in the best possible shape to get through what's coming.
Yeah, it's a great point. I don't know how well I'll do, but I guess I'll have to
Me neither.
work on it. I'm not very good with my hands. My one challenge, I guess, especially if we look at sort of farmland and land, I feel like that's something that potentially the government could just tax to oblivion. And we've seen that before, where if they want to sort of take the land off you, they just increase taxes very highly, or to a point where you either have to sell it or it gets repossessed. So do you see that risk as well? And I guess it's similar to gold confiscation and other asset confiscation.
Yes, there are risks with everything. And one of the points of diversification is that you live in an uncertain world. You don't know, you know what the risks are, but you don't know which risks will go from possible to real during your time frame. So you put your assets in different places in different forms, on the assumption that some of them will be lost because crazy things will happen. You just don't know what crazy things, but a lot of it will survive, and what survives will be enough to help you survive and to protect you. So yes, if you buy a bunch of farmland, on the one hand, you're in great shape because that's a great asset to have. But on the other hand, you can't take that with you and split the country, because it's big, it's not portable, and it's visible. So it can be taxed out to oblivion, or it can be regulated away, or it can just be confiscated. So yes. So don't put all your money in one thing like that. Think through 5 or 6 different things in 5 or 6 different forms, and then see if it's possible to, for instance, own some gold and silver coins that you can get to, and then have some stored in a foreign vault, in a place that's less likely to go crazy and confiscate everything. Have some land here, maybe have some in a different place, and have a safe deposit box for some things, and a storage unit for other things, and it just goes on and on. The process of diversification really never ends if you don't want it to. I mean, I think most people reach a point where the complexity starts to become worse than the benefit. And so at that point, whatever that point is for you, that's when you stop. But hopefully you have done some diversification along the way, and you've got some stuff spread around. You know where it is. The right person besides you knows where it is, just in case you're not available to go get it. And you're as prepared as you can be. We can't be 100% prepared for everything, because then there's a nuclear war and we get vaporized, and we weren't prepared for that. What can we do? But we can be prepared for the highest probability things, which is what preppers have always done. It's interesting how the survivalists and the preppers are becoming the lifestyle that the rest of us aspire to. And that's a sign of how crazy this world is, because 10 years ago, those guys were seen as wingnuts, fringe people. And now we're all looking at them going, oh man, that guy has how many guns? He's got how much farmland, and they're becoming the people who got it right. So we need to emulate them, at least in their actions, as far as prepping goes. And we've got them as examples to follow. So it's not uncharted territory. You just look at what the guys who've been doing it for 20 years have done, and then figure out what part of that you're capable of doing, and do it.
Yeah, makes sense. So, John, thanks again for your time today. I really appreciate it. We've covered so many different messages. So, I guess from your perspective, what is the key message that people should take away from our conversation?
Well, the key psychological message from this is that what we talked about is a lot of it is terrifying, and a lot of it is daunting, but it's also an investment thesis. It's possible to make a ton of money if you get it right going forward. In other words, buy the right stuff, store them in the right place, and do so with the correct timing. And fortunes are going to be made throughout the coming crisis, because a crisis equals an opportunity or multiple opportunities. So look at it that way. Think about how well you'll do if you get this right. Look at, back to gold again. Think of, all right, what do I have if gold goes to $10,000 an ounce? And let that be your guide. Keep your eye on that prize. And you'll find that this isn't nearly as daunting, because there's a big reward out there. If you get this right, you do very well for yourself, and you're one of the smart people left in humanity. And all of this stuff is very doable. The investment thesis that flows from this is simple, straightforward. And that's what we do on the Substack that I run, is try to create portfolios that are going to do as well as possible in the stuff that's coming. And they're getting big. The portfolios are pretty extensive now. And that's what makes this psychologically tolerable, because you're doing something productive with a potential big payoff if you get it right. And that's like playing a game. That's fun and not nearly as daunting as just worrying about Armageddon.
Yeah, it's a great way to look at it. So, John, thanks again. You mentioned your Substack. Is that the best place people can find your work? Is there anywhere else people can see what you do?
No, just the Substack now. It's rubino.substack.com, and you can sign up for a free subscription and get most of what I publish.
Perfect. I'll put that in the description below. So thanks again for your time.
Thanks, Anthony. See ya.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.